What's going on, guys? Welcome to the Hustle or Stay Basic channel, the Invest or Stay Basic segment. I'm your host, KG, at KG the Hustler on Instagram. And today we're going to take a look at a company that one of you viewers has suggested. It is Telus. Thank you, Vivek, for dropping a comment. I appreciate it. And if you gain value out of this video, like the video, subscribe. I really appreciate it. So let's get into it. Telus Corporation, ticker symbol T, trading for $25.80 per share. Has a market cap of slightly under $35 billion. It's part of the big three, Bell, Rogers, and Telus, of course, the third one, in the telecom industry here in Canada. Has predictable cash flows, a safe dividend, a really good dividend actually at 4.83%. And it's up 31% over the last 5 years. So it's definitely not beating the market with a return of 31% over the last 5 years, not including the dividends. But I mean, the real allure here for this stock is the safety factor of being part of this big three monopoly in the telecom industry, and, you know, the juicy dividends that I mentioned of 4.83%. So, I mean, I mentioned already what they do. They provide telecom services in Canada. They also do provide TV services, internet, and security as well. Cool fact that some Canadians don't even know, but Telus does own the T.TO mobile service and the public mobile service. So I mean, if that's your phone provider, you're actually a Telus customer. Not much to touch up on here. I mean, like I said, this is a safe stock. You can see they've had consistent sales and earnings throughout the pandemic or throughout kind of any sort of economy. And they've gone from $13.3 billion in 2017 to $15 billion in 2020. So some pretty decent growth. I mean, consistent sales, consistent earnings, predictable cash flows. But let's go take a look at their revenue streams. So Telus has two revenue streams. They have the wireline stream and the wireless stream. So the wireless stream consists of revenues associated to your mobile phone. That would be data services, calling services. And also this includes equipment sales in terms of the phones that you can get through Telus. The really interesting thing to note here is their revenues are actually down about $100 million from 2019. But their subscribers are actually up 500,000. So, how does that make sense? And Telus actually has good reasoning behind this. No one's traveling, and Telus makes definitely some revenue from roaming. So due to customers just being at home, they've seen a drop in roaming charges. Secondly, with retail stores being closed for most of the pandemic due to not being essential, customers have not been able to go into these stores. And at these stores is where customers can kind of be persuaded to do a plan upgrade or do some sort of thing that can affect the top line sales for Telus. And since they're not having those conversations, of course, that's going to drive some decrease in sales. And lastly, and probably most notable, is a lot of people are working from home. They're relying on their Wi-Fi and they're not going over their data coverage. So due to that, they are seeing a decrease in revenue. So we have a little summary here. We're down 2% in network revenue and down 7% in phone revenue. I think this is temporary. I believe when things start to open up, you can actually be bullish for this industry, for the wireless segment at least, because customers are going to want to travel, and I think there's going to be a lot more roaming than what has happened historically. So I think that's actually really bullish for Telus. And also, people are at home, so I mean, no one's flexing their brand new phone. No one has the need to be like, hey, I want to get a brand new phone so I can take better pictures and travel and do all those cool things. So I think both of these things will increase when things open up, but I think that's more so 2022 than 2021. So I guess to summarize the wireless segment, revenues are down slightly, subscribers are up, and I think there's some great tailwinds for 2022 to see this number go up in a pretty significant manner. Okay, cool. So now their second revenue stream is wireline, and that consists of internet, TV, residential voice, and security. This revenue is up quite a bit, specifically the data service side, 20%, and that's due to more people signing up for internet. I mean, 8% change from last year, and more people signing up for security, 16% change from last year. And I think that's probably a continued trend with more people staying home or working from home and doing that more in the future. I could see their internet subscriptions go up. I could see their security subscriptions go up in the future as well. But the things that might go down are the TV and residential voice. I mean, a lot of people are starting to stop ordering cable TV. I mean, there's other services, online streaming services that a lot of millennials and others are using. So I can see their TV and residential voice. I mean, who has residential voice? If you have residential voice, let me know in the comments below. But I can see those numbers go down as well. All in all, this 7 billion mark that the wireline services did in revenue, I think is pretty repeatable, pandemic or no pandemic. I think this is a very safe and solid revenue stream. So to get excited about Telus, I mean, they have this overview of 2020, and I think this is awesome. It has nothing but good news, and I think as an investor, you should be excited. Number one is they grew their revenue by 5.5% in 2020, and they're projecting 8 to 10% in 2021. I believe it'll be higher in 2022, and this number might be lower in 2021, but let's see about that. They're estimating their free cash flow, which they can pay dividends with, to go up from 1.44 billion to 1.5 billion. So that's awesome. I mean, they could potentially increase dividends for you. So that's, I mean, they're already paying 4.8%, so maybe you'll be getting 5%. So I think that's awesome. So they're doing all that, and they're reducing their capital expenditures or the expenses. I mean, that's amazing. So revenues are up, free cash flow will be up, and their expenses will be down. I mean, that's what you want to see from a business. So that's really exciting as a Telus investor. Another thing to note is Telus had the least percentage of complaints as a telecommunication company here in Canada, led by T.TO. So I think that's awesome. That leads to more customer loyalty and potential growth in the future. So you always want to invest in a company that's doing well and customers love. So it seems like Telus is doing that. So valuation wise, you guys know me. When I look at dividend stocks, I like to look at the cash flow and specifically the price to cash flow ratio. Today, it is trading at a ratio of 7.67, which is slightly above the average. I mean, pre-COVID, it was at 8.2, but that was pretty high in my opinion. I think if you can get this at 6.5, which would put it at a $22 per share level, that's really great value. I mean, you'd be getting over 5% dividends and more potential for growth. At this level of almost $26 per share, I think there's very little share price appreciation that can be had. I do think there is some that can be had, but I think there's better opportunities. Analysts tend to agree with me in the sense that they say, hey, there's 11% upside for this company. I mean, that's pretty awesome considering that they did 30% over the last 5 years, but I still think that's a little too little for me to get excited about. And I'd prefer to see this in the $22 per share range. If there's ever a correction, which I believe there will be a major correction in the markets, I'll be looking to see if this company drops within that $22, $21 per share range. And I will definitely be scooping because I'll be getting great dividends and potentially 30% upside, which I think is awesome. Another thing to note before I wrap this up is Telus did issue 11% more shares in 2020, and that kind of dilutes shareholder value. The reason they did this is to fund their 5G infrastructure projects. I mean, as a T.TO customer, I'm happy they did not pass those charges to me, but it does affect the shareholders. So yeah, to summarize, I'm looking at the stock in the $22, $21 per range just because I want more upside, but I do agree it is a very safe stock to hold. I will not be purchasing it at this price. If you found value in this video or enjoyed learning about Telus, please like this video, subscribe. Let me know in the comments below if there's a company you want me to take a look at, and I appreciate all the support. See you guys next time.